is Melinda Hipp. She is currently the branch manager of Van Dyke Mortgage. She is also a certified teacher with San Antonio Board of Realtors. That's how I met her. I saw her in a reverse mortgage, MC, which is mandatory credit, continuing education is where I met her a long time ago. She's known to be an avid spokesperson for the reverse mortgage brand. She's recently celebrated 34 years with her husband. Wow, Lee, who is part of the San Antonio Symphony Orchestra. Is that right?
That's correct.
Yeah.
What does he play?
He plays tuba.
So do I.
No, you don't. So me and Melinda were cut from the same cloth. I was a big banner growing up. My son's in the band. Bobby is a janitor.
I played football.
No, you didn't. And so you got a bachelor's degree at Texas Tech in music. Is that
That's correct.
And then
Yes.
an MBA and MA in arts administration at SMU.
That's correct.
And you gave up all the limelight to come and be a reverse mortgage specialist.
I don't know about that. leaving the nonprofit world and
Yeah.
going into the profit world is a little different.
Exactly. All my friends that are still in the music industry, they love what they do, but you know, it doesn't pay as well. Unless they're cool like your husband that works for the San Antonio.
There you go.
Yeah. So, Melinda, there's a lot of questions about what a reverse mortgage is, and we're gonna have to try to explain that as best we can to the public here.
Well, sure. A reverse mortgage, simply put, is similar to a home equity loan, which a lot of folks are familiar with.
Sure.
The biggest difference on a reverse mortgage is you're going to borrow the amount of equity in your home based on your age, the value of your home, and the current interest rates of the day.
Okay.
You can borrow any or all of that equity. The biggest differences between a reverse mortgage and a home equity loan is these are HUD FHA insured, so they're insured by the government, similar to an FHA purchase product.
Okay.
There is no repayment of this loan until you are no longer occupying the home as your primary residence. And you can use anything you want with the funds. It's your funds. You can use it for any reason.
Go to Vegas, put on red.
No, we don't normally recommend that. That's
Sure.
probably the best use of your retirement funds,
Right.
but of course, we're not going to keep you from doing that.
Okay.
But basically, most people are going to supplement their retirement income. I mean, we have anything from people want to pay off, they have some smaller balances on their mortgage still at that age, and our age starts at 62.
Okay.
So people at that age, they might still have a small mortgage, so we're going to pay that off so they no longer have a mortgage payment. They may simply want to supplement their retirement income. They may want to pay for home repairs or modifications because most people have been in their home for many, many years and probably need some updating.
Right.
Even if they want to sell it in the future, it's a good thing to do to repair or modify the home.
Sure.
They may need to modify it for some kind of handicap accessibility, which is another good reason. Or simply people just want to use it to just add a little additional income to pay taxes, pay insurance, visit the kids, travel more, all sorts of reasons to do the reverse mortgage.
So in layman's term, a reverse mortgage is kind of like a refinancing of your home, right?
It is,
You have
to
to be
pull
a-
out the equity.
Right, but you have to be at least 62 years old.
You must, but in fact, if it's a couple right now, the Texas law states both parties must be 62, so we
Okay.
cannot do it unless both married people are 62 in the home.
Okay.
Is this a new concept here in San Antonio? I really haven't heard much about it.
Well, in Texas per se, we have only had the reverse mortgage since 2001. Reverse mortgages have been around since the early 90s for the rest of the country. But Texas being our own country, we had to vote it into our own constitution. And we did that back in 2001. And at various stages, we have also had to go back and vote on additional products with that same reason in mind.
So since they started doing this in 2001, do you see more and more people doing it or actually learning about it and taking
Well,
that step?
definitely. If you look at the numbers that HUD publishes, actually the numbers are almost double in the years that Texas voted the product in. So yes, you can say by looking at the numbers across the board that more people are doing them just because we voted it in.
So other than being 62,
Yes.
tell us about some of the qualifications that
Okay.
someone would need for a reverse mortgage.
This is the absolute best product for you to use if you have no worry about your income or your assets. So we don't look at credit scores. We don't look at income. We don't look at ability to repay the loan because you're not having to repay the loan. This loan is going to be repaid upon you're no longer living in the home, whether it's through passing away, selling the home, having to move in with the kids, moving to a nursing home, whatever reason. The loan is not repaid until the end, along with the amount you borrowed plus interest and the mortgage insurance.
Okay, so somebody starts this at 62. They live
Yes.
to be 100,
Correct.
120. They still don't have to pay it back.
That's correct. As long as you've occupied the home, paid your taxes and insurance, and maintained the home in good
So
condition.
eventually, they would get repayment, whether it's 50 years after you're 62 or not.
That's correct.
Gotcha.
So if you're just joining us, we're talking with Melinda Hipp. She's the reverse specialist here in San Antonio. She works for Van Dyke Mortgage. And she's breaking everything down of what a reverse mortgage is. Now we're talking about a lot of the myths that reverse
Correct.
mortgages have, because there are a lot of myths. And
Yes.
what are they, and why are people kind of questioning reverse mortgages?
Well, there are a lot of questions. Just as anything else in the media likes to publish, unfortunately, bad news versus the good news. And that's just the way it is. So people hear a lot of things. The number one myth is that the bank owns your home. Well, the bank doesn't own your home any more than if you have a regular mortgage.
Right.
There is a lien placed on the home, just as in any mortgage product. So the bank does not own your home, nor does the bank take your home over automatically in the end.
Right.
Unless you may be upside down. There is a potential that you could be upside down if you borrowed at 62 and lived to be 120. The interest in the mortgage insurance could have accrued to where your balance is higher than you owe back. But in that case, you don't have to pay any additional funds back. You basically beat the bank at that point,
Right.
and most people would like to beat the bank at least once in their life.
Yeah.
So they don't have to repay any difference out of the pocket. The next myth is that the fees and the closing costs are extremely high. Well, I have to say they actually are lower than if you are actually purchasing a home on an FHA product. HUD regulates the fees, and there are certain fees they cannot charge, and there are not any special reverse mortgage fees. You do have mortgage insurance and all the standard closing costs. But unfortunately, most people who've lived in their homes 30, 40 years, they really don't know what the costs are. They don't know what the cost of an
Right.
appraisal is, or
Right.
the cost of a title policy, because they haven't been in that kind of transaction
For so long.
in many, many years. So I usually say to them, well, what was the cost of a gallon of gas or a loaf of bread 30 years ago? You have to look at what prices do go up over time. So unfortunately, those myths are out there, but we can usually overcome them.
It's a sticker shock, though.
That's correct.
I got you. Okay, so why are reverse mortgages beneficial to the consumer, you think, overall?
Well, the reverse mortgage is mostly beneficial to a client because it's going to assist them as part of a financial plan in their later lives. Now, yes, you do have the client who has an emergency, they're going into foreclosure, or they have no funds to pay for retirement because they're on limited income. But it can also be a very important part of a financial plan to save some funds instead of having to utilize your funds for other reasons. You can take this equity out, which is your money, by
Sure.
the way. It's your biggest investment you've ever made.
Definitely.
And real estate goes up, even though we have recessionary times, values go up. So you have the equity. Why not take it out and use it in your retirement years for whatever reason that you'd like?
Yeah, so there's a lot of myths to should I use this, should I not? A lot of people, they look to in their older age to get assistance from their family, but they can do it with their own equity. And so
Well, definitely. I mean,
Gives
you
them
have
freedom.
you have to look at it instead of having to. Most people will never go ask their family for help. They don't want to do that. They'd
Sure.
almost rather not eat than ask their family for help.
Right.
And on the opposite side, the families don't want to have to help the mom and dad.
Well,
so
that's
this
true.
is a way
because
to
I don't want my family to ask me for help.
exactly.
I totally understand that.
Well, I mean, most people
I'm
would
kidding, Mom and Dad.
most people would help their family, but they don't ever get asked.
No, I want to help.
So we're going to
So-
take a quick break. We'll be right back with Melinda Hipp. We're going to talk more about this Mortgage Matters. Don't go anywhere. You listen to Bob and JJ Radio.